Well, I'm delighted to be talking to Albert Johnston at Philoro, who are one of our sponsors for the New York event that we're hosting tomorrow night at the Yale Club. Welcome, Albert.
Thank you very much, Dave, for having me.
So you're a first-time attendee and sponsor at our networking dinner tomorrow night at the Yale Club. It's fantastic to have Philoro on board as the sponsors. It'd be great to hear a little bit more about your own background and the company.
I've been in this industry of the investment physical precious metals business since actually June 1995. So I'm going on 29 years now of doing this. And I deal directly with private investors, high net worth individuals, family offices, family trusts primarily. And I'm in the business of selling physical gold. Besides gold, I sell the three white precious metals also. That means silver, platinum, and palladium.
And tell us more about the Philoro Group and its origins and the network that it covers the globe with today.
Sure. The Philoro Group, its headquarters in Vienna, Austria, or their global trading office in Zug, Switzerland. And it's a global organization because we have 17 branches in 6 different countries on 3 different continents. We're primarily in the Germanic-speaking part of Europe. We're in Austria, we're in Germany, we're in Switzerland, and we're in Liechtenstein. Then we have an office in Hong Kong, and we have an office here in the United States, right here in New York City.
And what kind of services do you provide to private clients?
First, we have what we call physical delivery, where you order it, you pay for it, and we send the product to you, whether it's to your bank or whether it's to your home, the place that you've designated it to go to. Okay, number 2, then we have insured depository storage, which is a depository storage which is insured by Lloyd's of London. We use Brinks and we use Loomis. Now, in the depository storage, the investor has a choice to store through us on an allocated basis, meaning his name is on that. Or the client has a choice to open his own account at some depository or some bank, and the metal could be sent that way. The other thing that we have is that here in the United States, opposed to Europe, you can put your self-directed IRAs and your SEP programs, self-employment pension programs, into your retirement account. So you actually put the physical metal into your account. Now, the federal government requires you to put it into one of the exchange-approved depositories, which we use Brinks and we use Loomis for that. Okay. Then another service that we would have is that we offer two-way trading. In other words, anything you buy from us, we'll buy back from you based on the market, whatever the price is. And that goes into price execution. When you purchase from us, it's very, very simple. It's merely a transaction over the phone, and you lock in the price, and the price will be based on whatever the market price is at that time. Now, all physical precious metals, meaning a bullion bar or government bullion coins, have a premium on it. So you're paying a small premium over the exact spot price at that time. But when you execute a transaction, it's same as executing something on the stock exchange. You're getting whatever the price is at that second.
Are you often working with clients who are investing in gold for the first time, or it's sophisticated investors who already have an allocation to gold and are looking for a different way to do things? What do you tend to find for new clients?
There's a lot of people who are called, we call gold bugs, okay? They just believe it. And a lot of these gold bugs are people that have to have it in their hand, okay? But what we're seeing here in the recent years, when I say recent years, the last 3 maybe or 4 years, and especially in the last year or 2, we're getting investors calling in or contacting us through internet and calling in and saying, listen, I don't know anything about gold or silver or the precious metals. I just know I need to have some in my portfolio. I don't know how to do it. Can you tell me how it works like this? So we're getting the new kid on the block is kind of coming into town right now, and who's never done it before. And it's coming out of fear.
And how might they look at gold versus the other precious metals that you mentioned in terms of their goals and allocation and what they think about how they should be investing in any of those?
Good. Certain people will only buy gold, certain people will only buy silver. And then I have a smaller select number of people who like the PGMs, what we call the platinum group of metals, like platinum and palladium, especially platinum. In way of platinum, for some reason, most of these people who buy platinum have an engineering background or something related to the automobile industry, because platinum and palladium, their biggest uses is in catalytic converters, okay? But here in the United States especially, you have a lot of silver buffs, people who just want silver. So some of my clients have gold, some have silver, and a lot of them have a combination where they've diversified and put a certain percentage, say, in gold and another percentage in silver, and maybe some with platinum, palladium to a lesser degree. But there are certain people that are more heavily weighted in physical silver than they are gold.
And what do you find in the family office market, or the very sophisticated larger clients who will perhaps, almost certainly already have an allocation to gold? When you're in front of those clients, what are you talking to them about?
Primarily, I'm talking to them about kilobars of gold, okay? The high net worth individuals and the ultra high net worth individuals, okay, tend to buy kilobars of gold. 30 years ago, they were buying 400 ounce bars of gold. But kilos are a little bit more easier to deal with because of the liquidity, the size. A kilo, by the way, is 32.15 troy ounces, opposed to a 400 ounce bar, which is 12.5 kilos. Okay, so there's a big difference there. But the high net worth individual generally buys kilos, but some of them will buy a portion of it in coins. Okay, and those coins that will generally be delivered to them. Like, for instance, I have sold the Austrian Philharmonic, is my favorite coin from the Austrian Mint, okay? Sometimes people will buy $5 or maybe $10 million, you know, a high net worth individual in coins, because he'd rather have the coins than the bars. And for Americans, there's a couple of reasons for that. When you sell bars back, whether it's silver, gold, platinum, palladium, they're IRS reportable on the sell back, not on the buy. Where there's only a few coins in gold that are reportable on the sell back. So some American investors I'm talking about in particular right now, I'm not talking about our clients in Europe, that's a different cup of tea, want the coins over bars because they don't want the reportability. They want to be a little bit more discreet, in other words.
Yeah, absolutely. And talking about the spread of the client base, I mean, where are the clients you would deal with from here? Some in Europe, further afield out to Middle East, Asia. Where do your clients tend to be residing for this office?
I reside primarily in the North American market, but I do have clients that are in other parts of the world. Okay, and then our European sector deals a lot of times with some of those people in the other parts of the world, which makes sense.
Yeah, absolutely.
You know, if someone wants a store in Switzerland, or they want a store in Austria, or something along that line, or maybe in a bonded warehouse, let's say off of Heathrow Airport in London, which you can do, or a bonded warehouse, let's say in Switzerland, and is very common next to the Zurich Airport.
So you mentioned new investors coming into the market, driven by demand for gold,
right?
People wanting to have an allocation towards gold and other precious metals. What do you think is driving that demand?
Okay, fine. One of it is fear. Okay, people are concerned about the dollar. Okay, people looking to diversify out of their traditional type of assets. You know, there are the people that are kind of doom and gloom and think that the stock market is going to drop and various things of that sort, but basically, it's a store for the long-term buy and hold investor, which is very common for the high net worth investor. Okay, it's usually a long-term buy and hold. And a lot of times it even goes on to the next generation. Okay, then a lot of people are buying, I said like before, for diversification, but they're also using it as a hedge. They're looking to offset risks that they may have in equities, bonds, annuities, or other things of that sort. So there's many factors moving. It depends on the person and what level of investment level that they're at also.
And with interest rates picking up, there's more of a yield available on other assets. Does that impact the way the gold price moves and how investors calculate the return?
Very much so.
Yeah.
Okay. The biggest headwind that gold has is the strength of the US dollar And now the new kid on the block is the yield on the US 10-year bond. Those are two headwinds against them. Why is that? It's because gold runs in negative correlation or inverse to whatever the US dollar does. So when someone in another country wants to buy gold, since all commodities are based in the US dollar, and especially gold, when somebody wants to buy gold, let's say in Europe as an example, okay, he has to take his currency, euro, and convert it to what it is in dollars. So when you have a strong dollar, that makes it very expensive in local currency terms to buy.
So the fact that it's non-correlated, I mean, how do you position gold against other alternative assets like crypto that comes along, or people buying wine or classic cars or other less correlated assets?
Yeah, I look upon that in a couple of ways. Crypto and Bitcoin, okay, are a new kid on the block. And trust me, when you see something that has that high of volatility, it causes excitement and people get on board, okay? But there's no underlying physical commodity behind it, is kind of my own personal argument on that. I think there's a lot of money to be made on that. I think, but I call that a speculative investment opposed to a solid store of wealth.
And I mean, what's the case for owning physical gold over other kind of proxies, like owning the mining stocks or ETFs backed by gold? What's your case against that when you're talking to potential investors?
Okay, when you're owning a mining equity or a mining stock, you're investing not in gold, you're investing in the company, okay? So, which I advise some of my clients to be holding certain mining stocks on a long basis, such as Newmont or Barrick or some of these larger companies have been around for a long time. I think it's good to have that kind of diversification. But you are investing in a stock, you're not investing in the gold at all. And my biggest kind of, I would say, comparison is, we had the financial crisis in 2008. Whoever thought that the strong, solid blue chip stock called General Motors would go down to $1 a share?
And in terms of transaction costs or how you charge clients, I mean, perhaps you could break down how they would pay for your services.
Yeah, that's a real good question, because a client needs to know that, okay? Okay, as far as transaction class, it's whatever we refer to as the ask price, okay? The ask price is the premium price, whatever the premium is on that particular bar or coin. That's all they pay. We don't charge a commission or anything of that sort, okay? Now there would be a shipping cost if we're going to ship it to you, smaller amounts, let's say 100,000 or less or so, we will pick up the shipping, okay? But in larger amounts, then the investor has to pick up the shipping, and we give them the quoted rate that Brinks or Loomis or however it's shipped ahead of time, so they have a clear picture.
Okay, and we're looking forward to the dinner tomorrow night. We're going to be in touch with a lot of new contacts, professional advisors dealing with high net worth clients. But what kind of contacts and professional advisors do you deal with to date, both here in the US and overseas?
Mostly wealth management. Mostly wealth management. People who are hands-on directly with their customers and things of that sort. Primarily.
So, and they would be able to partner with you because they primarily deal in equities and bonds and financial instruments, but they need a physical gold offering to round out their service.
Exactly.
And how would you enter specific partnerships with them? How do they transact with you if there's wealth managers who want to?
Well, a lot of times they're advising the client to buy from us directly. Sometimes maybe they're handling it for the client. It goes both ways. Depends, because certain clients want to be kind of discreet, so maybe they do it under the radar screen, if I may say that. Okay, so it can go either way. But a lot of times someone will like to refer me to their client because, a wealth management company or family office or whatever, they're getting a fee for their services. So a lot of times, because they would like me to explain to the client the values of gold, or maybe the history of gold, or any of these type of factors, which I do quite a bit with a lot of my clients.
Fantastic. Well, Albert, it's been great to talk to you today, and we look forward to sharing this interview.
Thank you very much, Dave.